What to do next after the Bitcoin rebound? If you're interested in knowing more about this, please keep watching. Currently, I still hold a short position worth 550,000 US dollars on Bybit. I have already closed a portion of my position, and you can see that the current position value is 550,000 US dollars. The entry price was around 27,800 US dollars. And I have already realized my profit and closed it, earning a little over 21,000 US dollars, which is approximately 650,000 NTD. However, there is still an unrealized P/L of over 300,000 NTD that I haven't closed yet. Should I close it now, or should I go long if there's a rebound? Let's discuss this matter today. If you think this profit is quite good, I highly recommend the Bybit exchange. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. After completing KYC and depositing 100 US dollars, you will immediately receive a Bitcoin contract position worth 1,000 NTD. You can choose to go long or short, and it will be opened for you directly. This promotion is truly rare, offering a free position. Now let's get back to the Bitcoin market. Currently, we are in a weekend market, which means the trading volume is low and the volatility is not very significant. Moreover, this volatility is likely to be meaningless, because once the regular market resumes, it tends to correct itself. In other words, the price fluctuations during weekends are generally negligible, at least most of the time. Now, let's take a look. This round, Bitcoin has indeed rebounded significantly. Since the candlestick with a long shadow, the price has rebounded by about 3% to the recent peak, which is quite significant for this short-term trade. Of course, this position is more inclined toward short-term trading, and not from a trend trading perspective. When will we have an opportunity for a real trend trade? That is also what we have been waiting for. A true trend trade would be when we have a confirmed break below the support level, after this larger consolidation pattern from the top. At that point, we would consider taking a trend trade, which is a longer-term position. For example, holding it for 3 months. I believe we need to wait for a downside breakout from this box pattern to have that opportunity. That is what we have been waiting for, which is a trend trade opportunity. So when will it happen? Well, it doesn't seem like it will happen anytime soon, at least from the current situation. I think it may occur between the end of this month and the beginning of next month. Why? I actually mentioned this before. It has a lot to do with the accumulation of time and trading volume. I have been waiting for this opportunity. However, I believe we should take another look and wait until the real opportunity arises. When it does, we should proceed without hesitation and enter our positions. Let's go back to the 4-hour time frame. Currently, we can see that the price is above this support level and has experienced a rebound. In terms of short-term trading, when it comes to short positions, you don't hope to hold the position directly until it breaks below. It's not a trend trade but a short-term one, where you enter from the top and go down. A better closing point for such a trade would be near this white line. You can choose to place limit orders in batches, or even consider closing the positions entirely, if you don't have a strong bearish view. For me, I am more bearish and I don't see any reasons to go long at this point. Why? Although there has indeed been a rebound and an upward movement in this period, when we look at the accumulation of trading volume during this period, this rebound doesn't have any advantage. Also, if we look at this rebound after the decline, it is actually a 38.2% rebound. It's a 0.382 rebound. This 0.382 rebound level is a relatively weak rebound. If it were a strong rebound, it would typically be at 0.5 or 0.618 rebound levels. However, we are currently seeing a 38.2% rebound, which is relatively weak. Moreover, in terms of trading volume, the bears didn't gain an advantage in this upward movement. The bulls haven't gained an advantage. The bears are dominating the market. So personally, I wouldn't choose to go long. However, we do have a short-term short position, and there is a clear stop-loss point at this level. Suppose that this S/a reversal is breached in any form, even in a long shadow. Here's the resistance, while here's the support. There's a swapping action happening. If the market reclaims this white support level in any form, it's a definite signal to exit short positions, specifically a short-term short position. Alright. If it breaks below the support, which I don't believe will happen anytime soon, I think that would be an opportunity for a trend. However, I believe it will take some time. For now, let's not discuss that situation. In this current upward movement, I consider it to be a relatively weak rally. Whether the price can rise, create a sustainable uptrend, go deep, and last longer. We can already get a sense from the beginning of this rally. At least, we can include one criterion for reference. You can observe that this rally is already showing signs of exhaustion. It hasn't even rallied much before showing signs of weakness. How so? As you can see, the price is moving upward. Indeed, each of these segments shows an uptrend price movement. However, the price movement is getting weaker and weaker. Each of the rises is becoming smaller. Moreover, you can notice that it lacks significant high points in the rally. For instance, the first segment, second segment, and third segment of the rally should form such significant high points. You can observe that the breakout amplitude of the recent high point is not significant. This is not favorable for the bulls. Also, notice what it resembles. An ascending wedge pattern, right? A wedge pattern indicates a weak and exhausted bullish scenario. So, everyone should be cautious about this. Furthermore, you can see that the volume is gradually decreasing during the upward movement. Therefore, in any case, I am not going to go long. I won't consider going long. Although there is a potential inverse head and shoulders pattern at this level. Patterns are just an opportunity for entry. They don't represent a trend. This statement, well, it's not something I heard from someone else. It's my own perspective that patterns cannot represent a trend. During the downtrend, it formed a head and shoulders pattern. The question is, should we respect the head and shoulders pattern or the downtrend itself? Of course, the latter. The trend is the main thing we should look at. Trading is about following the trend. However, the head and shoulders pattern can be used as a reference. What's the reference about? To be a reference for entry points. For example, if you really want to go long, you can consider entering when there is a volume breakout above the neckline. Alternatively, if the pattern is broken with a significant increase in volume and a strong upward move, it's a signal to exit short positions. In my view, that's what the appearance of a head and shoulders pattern at this point indicates. It doesn't necessarily mean the market is transitioning into a bullish trend. It's not that. At least, that's how I see it. Now, let's take a look at the CME gap. Currently, it is at 27,320. As we mentioned earlier, if you hold short positions, you may consider a conservative approach and close them at this level. It's fine, because it is highly likely that it could return to the 27,320 level during regular trading hours. Well, the gap is around $150, which still provides some room for profit, considering leverage is involved. If you are taking a conservative approach and have a short position, you can consider closing it at this point. However, if you have a more aggressive bearish view, you can hold your position for a while longer, as there might be surprises in store. Right? There might be surprises. So what could a surprise be like? This is a surprise. If this appears, it's undoubtedly an unexpected one. If such a scenario occurs, it would indicate the beginning of a trend. And in that case, I would personally consider adding to my position. However, it's important to note that this situation I've been waiting for requires some time to develop. So there's no need to rush. As for Ethereum, it has reached the trendline area. However, Ethereum has shown more strength, so it may not be an ideal target for shorting. Alright, thank you. You're welcome. To like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye bye.